Hey, what's up? Today I wanted to share my entry and exit strategy for yield farming. And if you're new here, my name is Richard. I'm a yield farmer and investor. I do keep this portfolio update playlist if you want to check out my portfolio, but I've done decently well when it comes to yield farming. And hopefully these videos would help you become a better yield farmer and DeFi investor. So I will be sharing 3 of my favorite entry strategies that you could implement in different types of tokens. And I'll also talk about position management as well as my exit strategy and a few things to keep in mind to help you limit risk and make more profits from yield farming. If you don't have a good entry and exit strategy in place, you could be entering at a bad spot and closing out of your positions when you shouldn't. So let's dive deeper here. And like always, this is not financial advice. I'm not your financial advisor. Please do your own research before making any investment decision. So one of my favorite ways to yield farm is to find a token that I'm bullish on that has a chart that looks kind of like this. It's kind of crabbing sideways here, and you can see that there are periods of times where Pendle is outperforming Ethereum by a lot. And the reason why I look at Ethereum here, and you guys can do that on TradingView if you set Ethereum as a quote asset, is because a lot of times we're pairing these altcoins with Ethereum. And if these altcoins outperform Ethereum, what we're going to have is a positive divergence loss. We're going to be sitting in some nice ETH profit on the way up. And then when it hits our exit target, we could close out our position for some nice profits, right? So what I typically like to do is I first look at the chart. If the chart looks decent, I dive deeper into the fundamentals to see if the project has good fundamentals, like the right narrative, the product market fit, the roadmap, and stuff like that. And what I want to try to secure here is a horizontal line of support for a good entry. And it doesn't have to be perfect, right? You can see my entry is definitely not perfect, but it's still much better than entering all the way up here. The reason why I enter down here is because when we enter into a liquidity pool, assuming that you're holding Ethereum, is we're swapping Ethereum for some Pendle in this case, right? If this chart goes up, it means that Pendle is outperforming Ethereum. And as long as the price trades above my entry, I would have a positive divergence loss. I could close out my position for a net Ethereum profit. So maybe I start off with like 2 or 3 Ethereum. And then if Pendle does outperform, maybe I could close out my position for 3 or 4 Ethereum, right? And then throughout the whole time, I'm earning some ETH yield in the process. So this is really good if you're bullish on Pendle, because even if you're wrong, you're going to end up with a little bit more Pendle than just buying and holding Pendle, right? So we still want to make sure that we're providing liquidity for the tokens that we're bullish on. But the reason why I really like the horizontal zone of support is because they do tend to hold up better than like the trend line support. And it's much more objectively undervalued compared to Ethereum, right? Drawing trend line could be very subjective. Let's say I draw this green trend line here. Let's say you enter here and then enter here. This is also fine. But then up here, if you're trying to enter into a trend line support, it did break down. So you could have gotten a better entry in this case, right? So trend lines are not as useful in my opinion. But again, this is the ideal scenario here where we could get in at a good entry. And we could look at different projects as well. For example, Tau. I actually do not know that much about Tau. I know that it's an AI project that a lot of people are bullish on. But from looking at the chart, what I could see here is that sometimes Tau outperforms Ethereum by quite a lot, right? Once again, I want to look at the Ethereum chart because if I'm pairing Ethereum and Tau, that's what we're yield farming with, and that's what people are trading. So if Tau outperforms Ethereum by quite a lot, then we could close out our position at an Ethereum profit when the outperformance is there, right? And again, this horizontal line of support is much better entry than all the way up here or all the way up here, right? I see a ton of people make the mistake of using a tight range strategy when the prices are really high, only to see a huge retrace. You're going to be bleeding out a ton of Ethereum in the process, because if the price do exit the bottom of your range here, you're going to be stuck with 100% Tau, right? And because Tau is losing value to Ethereum, once it exits the bottom, you're actually looking at a 56 something percent drawdown on your original entry. So let's say you entered with 10 Ethereum with this tight range, you're now looking at like 4 to 5 Ethereum that you have left, right? So this is not the ideal scenario at all. What I like to do instead is to capture the swing upward like this. If I have a pretty wide range here, what I could do is I provide liquidity. If the price just moves around, that's completely fine. When I hit my profit target, I could withdraw my liquidity, sell it into Ethereum, de-risk my positions, and basically work with my portfolio from there, right? But again, the risk and reward is very favorable when you guys are entering in this zone of support, especially if there are solid fundamentals behind the project. If you guys are yield farming with higher risk stuff, we don't want to over allocate. I still do provide liquidity for some riskier stuff sometimes, but again, getting a good entry could be really good in this case. So I'm actually yield farming Pendle and ETH, right? I did not get the best entry, but that's completely fine. It's normal that you don't get the best entry. In fact, it's very rare that you will have the best entry. You just got to know how to manage your position from there, right? And like every single strategy is not 100%. You're not going to close every single position in profit. But this strategy does have much higher success rate than a lot of the range chasing strategy that you might be seeing online. So this is a client position that I entered at a pretty good entry. So what happened was we were holding a bunch of stable coins because we had a tighter ETH to USDC range that we were yield farming with. Our portfolio was already pretty heavily into Ethereum. So when the prices of Ethereum did exit the top range of the pool, we were stuck with a bunch of stablecoin that we want to deploy, right? And what happened at the time was that we were looking at a bunch of different opportunities. One of the opportunities being Solana to USDC, because the fundamentals of Solana's are still very solid. It seems like Solana's outperformance was coming, and it did come shortly after we entered. But basically, what we did in this scenario is that we see that the token is on a pretty strong uptrend, right? It's respecting this 50-day simple moving average here, which is the orange line. It's also bouncing on this trend line here. And what we did in this case is to do a trend line entry. Again, it's not ideal, but if a token is on a strong uptrend, you're not going to get this horizontal line of support entry unless the token cracks down really hard. Of course, if we do get in here and our goal is to make a US dollar profit, that's the ideal scenario. It's going to be much easier to hold if you get in at a good entry, because if the prices again trade above, we're going to have a positive divergence loss. Our LP value is going to be in US dollar profit. And it makes sense, right? If the prices are trading above, it means that whatever Solana that we buy when we enter into the pool is being sold at a higher price than what we bought it for. So that's why it's important to try to get the best entry you can. And for this entry, again, we did draw a trend line here. And what I like to do as well is to use this fib retracement tool. We draw from the swing high to the swing low here. And the levels I like to use is this 0.382, 0.5, and 0.618 retracement levels. These are the levels that a lot of investors and traders are looking to buy. For example, in the first retracement, we see it crack all the way to the 0.382 retracement. But at the time, we were still in ETH to USDC. The pool was not out of range yet. And then on the second pump, we did get into stablecoins. And then what we did was wait for a better entry. When the opportunity does come, we enter into a sold to USDC pool, right? Right now, the pool is sitting in some nice profit. It's pulling in a pretty good APR while sitting in US dollar profit, right? That's what we want to try our best to do. And this pool does have pretty wide range. Our range is all the way from $100 to $500. If we want to stay in range for the altcoin season, I think that's a pretty decent range. Of course, Solana could absolutely go parabolic as well and go up really high. But this is a wide enough range where we would be happy with our profits. But what you can see also is that I did set a more conservative exit target here at this crucial $250 zone. It's the previous cycle high as well as the local high here of this cycle. We did wick above very briefly, but we never actually reclaimed that level. So this is more of a non-greedy exit target, right? And I'll go over exit strategies in a little bit here, but basically that was a pretty good entry and you guys could run a similar strategy if you're trying to enter into a stronger token, right? If you're trying to wait for a pullback, then the fib retracement tool along with like drawing trend lines and stuff like that could be a good tool. And the next strategy that I want to share is getting into a strong token that is on a strong uptrend. For example, Pump.Fund, the token launchpad on Solana, is making a ton of revenue. They're using a bunch of their revenue to buy back the tokens. Again, please do your own research. I'm not advising you to buy any of these tokens. I'm just sharing what I found. And my entry for this is around 0.0046. It's pulling a pretty nice APR with really wide ranges. Again, I prefer really wide ranges, especially with the altcoin season seeming to be around the corner. I don't want to miss out on the pumps. So in this case, I did not wait for a retrace. What I did instead is I allocate a portion of my max allocation to pump. For example, if I'm comfortable having 10% of my portfolio into pump, then I could allocate 5%, right? For example, if you guys have a 100K portfolio, you want a 10% max allocation to pump, then you could go in with $5,000 first. It's not a big deal if the token does not retrace and then you miss out on some of the upside, but at least you're still making profit. But what we can do in that case is, let's say Pump does do a retrace to test these key moving average, or maybe these fib levels here, we could deploy that other 5% to basically yield farm this pair, right? So what it's going to do is, let's say Pump draws all the way back down to this 0.382 fib levels. It's going to drag down our average entry, right? My entry initially is here. Maybe the next entry is down here. And then if the fundamentals are solid and the token is trending up over time, then it's going to make it much easier to turn a profit. So this is another less risky strategy that you could use to enter into a token that is trending up, that you believe is not peaking out yet. Of course, I don't want to enter into this pool if I believe that, the top is in for this token, right? And before I talk about the exit, let's talk a little bit about position management. What I like to do is something I call smart compounding. If we go back to Pendle and Ethereum here, you can see this green line is my entry. And this is like the max range I would go here in terms of tightness. But my actual range is actually wider than this because I want more capital gains. Again, I've shared in multiple videos that when you guys are setting the ranges, we want to think about like the trade-off between the APR and the capital gains and the capital loss, right? A lot of people squeeze their range for really high APR, but you're at a risk of missing out on pumps, and then you're also at a risk of losing a ton of money in a sharper drawdown. So the tighter the range, the higher APR you're going to get, but the more capital gains and the more capital losses you are going to suffer. But what I want to share with you today is the smart compounding strategy. If Pendle is underperforming Ethereum here, which it is, it's below my entry. I'm suffering some Ethereum divergence loss here, but what I can do is I compound some of the fees. And what it's going to do if I'm adding more capital here is going to drag down my average entry, right? And I could use the fees from other pools as well to do this, or to use whatever cash that I earn if I want more allocation to Pendle. We don't want to do this if our position is already very heavy. You're happy with the exposure, you're happy with the gains. You don't want to keep compounding. But if your position is not at max allocation yet, we could keep compounding our fees. It drags down our entry. And then if Pendle does swing back up against Ethereum, which I believe it will, that's why I'm in this pool in the first place, then I could close at an Ethereum profit later on, right? You just got to be a little bit patient, especially if you guys didn't get a good entry. For example, if your entry is all the way up here, you do the smart compounding strategy down here, drag down your entry by a little bit, and then when the price swing back up, you could close your position and then maybe wait a little bit before you buy more Pendle, right? So it's all about trying to get the best risk and reward as possible. Even though it's not going to be 100%, this strategy is still going to be better than like the range chasing strategy. Or if you're going in blindly, you're not even looking at charts. Some people don't even look at charts when they enter into a pool. and then they wonder why they lose money, right? So if you're entering at a very high price, if you're holding Ethereum and you're yield farming this pair at a high price, you're essentially buying a ton of Pendle at a high price rather than a low price, right? When we're investing, we want to buy low and we want to sell high. We don't want to do the reverse if possible. So now let's talk about exit strategy. The very simple exit strategy is that once it hits your price target, you could withdraw your liquidity and sell it into whichever asset that you want to accumulate, right? For example, for a lot of altcoin to ETH pairs, my goal is to actually not accumulate that much altcoin long term. What I want to do is accumulate much more Ethereum. I want to be stacking my Ethereum, right? If I start out with like 50 Ethereum portfolio, for example, I want to keep growing that to like 60 Ethereum, 70 Ethereum, 80 Ethereum. I don't want to be like, accumulating a ton of Pendle, especially heading into the bear market, right? And what is really key with this strategy is let's say you start with 50 Ethereum, you end up with 70 Ethereum. You could always take that 20 Ethereum to realize into like US dollar profit or into Bitcoin, whichever assets you want, into stocks to diversify and still hold that 50 Ethereum that you have in the first place. So the exit strategy here, assuming I want to accumulate more Ethereum, is I look at this zone of resistance, right? And I don't really want to wait for the absolute top, right? You guys can see that this zone tends to be the resistance. Of course, it could break out of this as well and just keeps drifting higher. But if you want to be a little bit less greedy, you want to lock in some profits, then you could be exiting before it reaches the top zone, right? We want to front run our exit by just a little bit. You will still have really nice profit. You don't have to wait for a breakout. And if you guys are waiting for a breakout, that's also a strategy that you could use. But again, if the breakout does fail, you're basically riding your position back down, right? Because let's say you're entering back here, you're yield farming this pair, Pendle basically outperforms. You did not take profit because you think it's going to move higher. You're watching it dip back down. Of course, you could still do the smart compounding. You're compounding low. And then what I like to do also to take profit is if the prices are trading above my entry, I want to be harvesting and selling my fees into Ethereum in this case to reduce my risk, right? If I put in 10 Ethereum and over time I sell more and more fees into Ethereum, I could eventually get a lot of my initial investment back, right? So that's a great way to de-risk instead of keep compounding into the pool. So it's up to you if you guys want to wait for a breakout or not, but a very simple and less greedy exit strategy is to just exit at this zone of resistance. And in addition to the Ethereum chart, I could keep an eye on the US dollar value chart as well. You can see that this area is potentially flipping as support. It used to be a zone of resistance here, right? But I want to kind of watch out here at this $7 mark. If Pendle is trading around here, maybe it's going to break out or maybe it could be sold off once again, right? Again, it depends on your overall strategy, your risk tolerance. If you want a less greedy exit, then this could also be a good target as well. And before I hop off, I just want to highlight a few important things here. The first being that your profit is never going to be guaranteed when it comes to yield farming, right? If you guys are yield farming altcoins, we're essentially betting that these altcoins are going to outperform and going to go up in value over time. That's why we accumulate in the first place using liquidity pools. But if you've been in the game for a while, we all know that it's not 100%, right? We want to make sure that we're betting on projects that have a probability of outperforming, but at the same time, we can't tell the future, right? And every single strategy that I shared with you guys, you could use it for blue chip pairs as well. For example, ETH to USDC. You could be entering down here in like key zones of support, right? Like the moving averages or like this horizontal support line here. If you are deploying a bunch of USDC, you could be setting a bullish range to sell Ethereum on the way up. If you enter down here and your goal is to stack more stablecoins, right? And we could do the smart compounding strategy as well. I do have a client portfolio, for example, that got in around like the March of 2024. Their entry was around $3,300 with a wider range. Obviously not the best entry, right? But what we did was basically when the prices are cheap, we compound more and more of our fees, we accumulate more Ethereum, and then when the prices rip back up again, we're in really nice profit. So you don't have to do altcoins if you don't want to. These concepts work for every single pair. For example, Sol to ETH. I did mark a pretty good entry area here. If your goal is to accumulate more Ethereum, then a really great entry to this pair is this zone of support, right? Of course, we never know if the support is going to hold, but entering here is still much better than entering up here, right? So you got to be mindful which assets you're swapping from, your overall goal, your entry and exit, and hopefully this video will help you out. And if you want to learn more about yield farming, I put out a ton of free content on my YouTube channel. So check them out. If you really like my content, then it would help me a ton if you like the video and share with a few friends. My mission is to help more people yield farm more sustainably so that they could reach financial freedom faster. Thank you once again for watching. I'll catch you next time.